What if you could buy a home today using yesterday's interest rates? With rates higher than 5 years ago and some homes sitting on the market longer, assumable loans can be a powerful tool, yet misunderstood in today's real estate. So stay tuned as we break down how assumable loans can finally help buyers win and sellers finally sell. Well, happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're talking about one of the most misunderstood and underused tools in real estate right now, assumable loans, and how assumable loans can help buyers win and sellers finally sell. But before we get to all of that, as usual, our cup of Joe kind of coffee talk this morning with the Joe.
For a second.
Obviously, I have not had enough coffee this morning as I get tongue twisted there. This morning, I've got a little bit of a beef, Joe, and maybe you can confirm or help me out with this. So we're in the season of Girl Scout cookies.
Okay.
Girl Scout cookies. Now, I really try not to buy them. So what happens last weekend? The wife, ends up mapping out where they're located and goes and buys like 4 boxes. Thankfully, she only limited herself to 4 boxes. One of them that she gets, and she didn't get my favorite, by the way. I want everyone to know that's listening. The Samoas. I love the Samoas, right?
Yep.
But she did get the shortbread cookies. And I love those, especially with the coffee in the morning.
Okay.
But here's the thing that really grinds me, and somebody needs to do something about this. For the past couple of years, Girl Scout cookies, the recipes have been changing.
Yes.
Right? And I remember a couple of years ago, there were these lemon cookies. They were like in a triangle shape, kind of a little powder like those things were awesome.
And then they stopped making those.
Yeah, and then they stopped making them. Well, guess what they did with the shortbread cookies? And by the way, anybody else ever notice this? Chime in. I would love to see your comments on this. If you've gotten the shortbread cookies, they're terrible.
What did they do?
They're definitely not as buttery as what they used to be, and they got them thin now. They used to be nice, thick things, and now they're like super thin. And they don't taste the same. They totally changed the recipe. It's ticking me off.
So that's one of Tina's favorites. I can't stand the shortbread. It's like, why do I just want to eat something with no flavor besides butter? But the Samoans, those are my favorites, and the Do-si-dos. But they changed those up too, and they're not the same anymore. So I agree with you. They keep changing up their cookies, and their price keeps going up, but the quality's going down.
Yes.
So I will get on the same beef with you with the Girl Scout cookies. They need to get this better. So, I just got distracted. We do have our guest that's coming on today, and Eva. No, Joe's going to introduce you, but I love that you just had your cat run through your camera. I don't know if Joe saw that. We've had pets come across every which way, so just kind of transitioning us, Joe, to it. Get off the Girl Scout cookies because today's show, I'm really excited about it. I know you are, and I'm excited to get a different perspective than our perspective on the assumable loans, is what you were talking about. So I'm going to let you, as we go into this, guys, I did want to say, please drop questions, put comments down there. We will share them. We will ask our guest speaker today about your questions. So please be interactive with us today and help us out on the show.
Agree. And I am super excited about who we have for a guest on a show today. I've been pumped actually the past couple of months and looking forward to having her on the show because she's a just a trip to be around. I got to tell you, it's always fun being around her, but she's is consistently one of the top producers with the Keisha Hazeman Property Group of Compass Realty. She works every price point from first-time home buyers to luxury clients, and she is the go-to specialist in VA assumable loans and creative financing. So please welcome to the show, everyone, Eva Ray.
Hi, guys.
Hey,
good morning.
Good morning. How are y'all?
Good. It's kind of hard. I'm not a techie guy, so I had to do all the transitioning of pictures. So welcome to the show. Before we get started, we try to, let you tell a little bit about yourself to anybody that is listening. We do actually have some good viewing today. So tell our listeners a little bit about you and kind of the area that you focus on so that way if they are looking for a home, that they can reach out to you too.
Sure. So I'm so excited to be here. Thank you guys for asking me. I work in all levels of residential real estate in the Houston area. I've been with Compass for, since 21. I started as a real estate assistant there. And then one of my first homes that I sold was over the $1 million price point and just have taken off since then. So I love what I do. And I have 3 kids, very family oriented, busy with them. I'm planning a wedding this year. So yeah, I'm glad.
Joe and Carrie got married not too long ago. So you got some good insight from them. I know the area that we went down to, Magnolia, if you're in that same area.
I am.
Trees down there are just gorgeous.
Yes, we love our trees here. I never would have referred to myself as a tree hugger, and I moved to Magnolia, and I am now arrived. I am a tree hugger.
You're a tree hugger. I love it. Well, I appreciate you coming on today. One of the things that our clients and people are talking about are, waiting for rates and, being in this as long as we have. In 2020 and 2021, you saw those really low rates and assumables to me was never a thing that you talked about because you could just get, you could do another VA loan or you could do an FHA loan or something like that and get a really good rate. So it didn't make sense, but it has changed. And I'm glad that you came on today. But what are some things that, that you're seeing is a benefit of the assumable loan based on kind of those rates back in the 2020 and 2021 era?
So it's perspective. From a buyer's perspective, you have a lot of buyers who've been sitting on the fence with regards to the rates. I want to buy, we're ready to move to the next, out of the starter home type of thing. But those rates are killing them. So for a buyer, it's allowing them to get into a house at, I think as Joe referred to it, yesterday's rate, so to speak. Which is great because some of these rates are as low as, depending on the loan, obviously, but I've seen it in the 2s. So benefit for them is to get into the house. The seller, it helps you get more creative about how to sell the house because a lot of homes, I say a lot, there are homes that sit for a while, and it's kind of a creative way to get that moving, to get more interest, because there are people that are specifically looking for assumable loans. They like the idea of getting, that house at that price point with that interest rate.
Okay.
Which, I mean, just so our viewers understand as far as what an assumable loan is that if you're looking at a house and that house has a mortgage on it, and we'll talk about in a moment here as far as different types of mortgages. But if that mortgage is assumable, then not only are you buying the house, but you can step into that mortgage at that interest rate, right? And just kind of take over the payments, so to speak. I mean, there's more to it than that, but that we'll get into. But that's the theory of it, is you're taking over the payments at that interest rate instead of going out and getting a mortgage at today's interest rates.
Correct. You assume the loan, like literally the word assume the loan as it is with the current owner. So it's just an exchange of name only, basically. And now you're the owner of the loan. And there are, different caveats to different types of assumable loans, but.
Okay. What, when you're talking to sellers, what type of loans, are assumable? So like if you're going and talking with a seller, what type of loan, are you talking with them about that could be assumable in that type?
Yeah. First, I kind of want to get to know them, like background, so forth. If they're a vet, that's going to be assumable. If it's a government loan, most government loans are assumable. I've got several new home buyers that are buying with FHA loans, and those are assumable.
Yeah.
If it's a vet, you have to decide as a vet if you're willing to give up your entitlement, and there's strategy behind that as well. The particular clients that I've worked for, one was willing to give it up because where he was, I don't want to buy a house. It doesn't matter if I have my veteran status because I don't want to buy. I'm willing to give that up to get this moving. I'm not sure that I recommend that, just because I feel like if you've fought for our country and put all this time in, that's kind of like a big thing to give away. However, it's money, right? It all boils down to money. So if you find a vet, if you have a vet that has an assumable loan and a vet comes to buy, you just swap entitlements. So that's pretty easy. And that's actually what ended up happening in that case.
Yeah. That, you bring up a great point there about, if it's vet to vet, you can transfer the eligibility as long as the one that's buying it has their eligibility. But the letting your entitlement still be used, that's somebody that's not a veteran. I just want to make sure we clarify that a little bit so people understand. Is like my father-in-law. He is a veteran. He has a very low 2.25% interest rate on a VA loan. So for him, when they are ready to sell or whatever, he's probably not buying another home because that's where he's at now. So in that case, it might make sense to do an assumable to where he's not going to use that entitlement. But I want people to know, just because you do leave that entitlement doesn't mean that you can't get another VA loan. Just might limit the amount of that loan that you can get at 100%. But there are ways of doing that. So I want people to know, if this is a strategy that Eva's talking to you about, or if your agent's talking to you about it, you still do have ways of getting another VA purchase loan done, even if that entitlement is still being used up. So don't think that you can't do another VA loan. That's a big strategy for sellers. Eva, what in the market, when it was a seller's market, I feel like this was not something that sellers were willing to do. So when did you see this kind of changing? I know this is kind of a different question, but about how long ago did you see this start changing from that seller's market? It's more of a buyer's market, but I wouldn't say it's a true buyer's market either in all areas. But when did you start seeing this kind of be hey, this is now a strategy to start thinking about?
Probably springish of last year, maybe February. Had a vet client looking at a house specifically for assumable loan. And it's funny because the agent that I was working with on that deal, she's like, I've never done this before either. And I hear that a lot. Both deals that I've done with assumptions, neither of the agents had ever done one. And I think that's the exciting thing, is that it's just creating a new avenue to problem solve to get a home sold, because people get hung up on, this is a problem and this is a problem and this is a problem. Like I said, I feel like what that tells me as a real estate agent is people are more concerned about how we invest our money and if we do it smartly. So the house doesn't have to be perfect. So really, there is truly a buyer for every single house, and real estate agents say that, in general. But this just opens up another level of that and allows those buyers, to be able to do more with their money at that interest rate. Yeah.
And if that's me, I apologize. I don't know.
I
don't know if I have a thing going off, but I apologize. I thought I had everything shut off, but you never know anymore.
I think
so. But the strategy I love, and I do think about that time people were starting to come out and want to buy homes again, and sellers are like, well, now people are looking. I think that's when that was spring of last year when I started seeing this conversation a little bit more. We don't pre-approve people for an assumable loan. It's not something that we do as people between Joe and I, because it's not something we actually can do. So who actually does the assumable loans? You've gone through this process. So if you're marketing this, how does somebody find out that they can get the loan? Like, where does the contact start?
Well, I guess there's twofold to your question. If I'm listing a home, I'm going to put into the agent comments, hey, it's assumable.
Okay.
So that other agents will know, hey, if you're talking about who actually initiates the assumption process, the agents will talk, hey, we're interested. We need to get this information. So the seller will actually initiate with the servicing company because he owns the loan. So that seller will get the paperwork initiated, tell them, hey, I want to go ahead and start whatever we need to initiate with the buyer. And it's kind of a weird space, I'll be honest, because we're so used to controlling all of this information and, protecting our client, don't talk to them, et cetera. But it's really, it's a relationship that you build with buyer, seller, agent. So because that seller owns the loan, he's really got to know who the buyer is and information. And the agent's just kind of, hey, seller, did you get that paperwork in? Did you call the servicer? Hey, seller, where are we with that? And the buyer's agent is doing the same just to make sure that we can move it along the pipeline.
So it sounds like instead of someone like Joe or I involved in getting the buyer pre-approved and everything, it sounds like it's handled more through the servicing company that's servicing the current mortgage.
Yes. So it's a third-party servicing company. And to be honest, that is one of the biggest caveats that I have heard is one of the problems, if you will, or challenges. I like that word better. With an assumption loan is because you're dealing with a third-party servicing company, it's going to take forever. I've heard that a lot. In my experience, it did not take quite as long as I thought it would. So they actually moved it along the pipeline relatively quickly. I think we started talks in November, like around the first weekend. And by like the 19th, 2021, we were closed on that deal. So
of November or December?
December, I'm sorry.
December. Okay. Wow.
But we didn't go under contract until probably Thanksgiving-ish.
So one of the things that we are hearing is there are certain servicers of the VA loans that are getting those done quicker than others. So I do agree that there are some of them out there that do truly look out for the veterans and do the right things. I have heard the flip of that where 6 months have gone by and they were still trying to get it done and they gave up. Wow. So, I think it depends on the agents that you're working with, work with Eva because, you've done a couple of them. You're more engaged with who, how many times you got to call, the timing of it. So you got to make sure you're working with a professional. And in this case, like you were saying, Eva, it's the seller has to initiate it. But I would still say you want to get pre-approved with a lender. And if you're going to look at something like that, a great communication between partners. And Eva, I know you and Joe have a great communication of back and forth with things. So if you were ever going and talking with a client about an assumption, letting your lending partner know, because you still want to make sure they're pre-approved, because not every home out there you're going to go and look at it assumable.
For sure.
And because no conventionals can be assumed. So that's one of the things. And it looks like we do have a comment, Joe, if you want to read. Mr. Pollard again. I love it when Brian is listening.
So an assumable loan obviously has no financial incentive for LOs, like Joe and I and Brian, but how can we use this practically with realtor and or buyer, maybe as a strategy to help a contingent borrowers sell?
So I guess I don't understand the question.
So I think he's asking it from a sales perspective on what we teach, right? So how would we use this as a strategy for a realtor that's trying to sell a home when we're trying to do the buy side and it's contingent on them selling that house? So he's asking how would you strategize that with the real estate agent, I think is what he was asking. In my opinion here, Brian, when you're trying to strategize an assumable, probably should have already had that information, like Eva was saying up front. She already has that on MLS that, you know, this one can qualify for an assumable. So that's already a strategy up front with the listing of it. That if that's not already done, I would say go back and have that agent update it. And then from a marketing standpoint, what I would suggest is a flyer of what that would look like on a payment. And that kind of goes into what we still have to talk about today is how does it work from the difference of what you're selling the house for and what the loan is? Where's that difference coming in? So that's one thing from a strategy standpoint to answer Brian's question that you would need to know. So Eva, can you talk about that a little bit about, you know, how that worked in your scenario?
First and foremost, with my clients, especially my first-time home buyers and buyers, get with the lender and talk about the scenarios. What is my goal as a buyer? What do I need to be at monthly? Where am I financially? I don't know that information. So once you get that narrowed down and get the pre-approval, then we kind of work different scenarios. And my method is, hey, this is an assumable loan and you're interested. Are you eligible? Here you go. Talk to the lender. Let's work through scenarios. Would it be better for you to do a conventional? Would it be better for you to do an FHA? Are you only allowed to do an FHA? You know, again, work with your lender to figure that out. In terms of the contingency, really one of the other big, and I wouldn't say, one of the things that you need to be aware of, you've got to bring the equity. So if the price of the home is different than your loan, you've got to bring that equity in cash. And, you know, that could be over a lot of money. Let's just put it that way. And it could be beneficial to some people who've sold in another state and are coming here and need a home. I can put that cash down, assume this mortgage, and now I have enough money to put a pool in the backyard, which is really what I wanted to do. So you really have to kind of understand where you are financially before you go out and look for assumable loans or really any house. That's just a wise suggestion.
So let's put this into some numbers for our viewers so that we have more of a kind of real life example in what you're talking about, Eva. So let's say that the home that is being sold and has a, whether FHA, VA loan that is on there is assumable. And let's pretend that the list price of the home is $500,000, just for numbers, right? And the balance on the mortgage that's on that home is $350,000. So there's a $150,000 gap there of equity. That's the amount that the buyer is going to have to bring to the table as sort of the down payment, if you will, right? To make up that equity gap, as we call it. So just as kind of some real life numbers, is that pretty much what happened with your clients last year?
It is. It is. And I have to tell you, this assumption sent us over the edge with one listing because it had been for sale for over, 7-8 months. And I got it. And he is out of the state. It's, you know, beautiful home on a large lot, lots of really good things about that home, but it just, for whatever reason, not selling. And we put it as an assumption after several months of open houses and all the traditional ways to sell a home. And I think we got 4 or 5 buyers specifically interested. So not droves of people, but all
Right.
it takes is one buyer.
Yeah.
And that one particular buyer was extremely interested in that interest rate. And I think the interest rate 2.7, 2.8, something like that.
Wow. Wow. That's super low. So in that case, it wasn't so much about the house, it was about the interest rate.
In both cases, it was, I really don't love the house, but I really love that interest rate. And we can work around what I don't love. So people, you know, I'm seeing more educated buyers. And that's, again, what the assumable loan tells me is that the education out there, you know, the buyers are getting more knowledgeable about what their options are and how to better invest. So.
And I think it's a great for realtors, if you're listening in on this, this is a great option to be able to have a strategy discussion with your client. If you have a home of theirs that you're listing and it's been on the market for a while, before reducing the price on it again, right? This may be a strategy to sit down and talk to your clients with if they have a mortgage on the home that is an FHA, VA. Today, though, Joe confirmed with me, most conventional loans are not made as assumable loans.
No conventional loan is assumable to my knowledge. You might have some non-QMs that they might let it be assumable, but it's usually just your government loans. VA is probably the most accepting. FHA, there's a couple of guidelines and things in there that they restrict you on. USDA, again, is very restrictive on income qualifications. So the easiest one by far is VA assumables, in my opinion. But I do want everybody to understand, you know, this isn't a free loan. Like, it's not just like, hey, you get a loan because, you know, you're wanting to buy this house. You still have to credit qualify, income qualify, you know, the down payment, like Eva was talking about. If you don't have that money, then you know that's not a strategy that you can go after, because there's not a whole lot of companies that'll take on the risk to do a second mortgage lien behind an assumed loan. So that it really restricts you. So it's really a great product for you sold your house or you have 20% plus to put down and you're already kind of doing that. That's when assumable is a really good strategy for you, where you could get into a great rate and you could get into a great home that maybe, like Eva said, it's not the perfect house for you, but because now you got that lower payment, it's the perfect strategy. And now, you know, Eva, you were saying it before, maybe there's a little bit less money you have to bring and you want to put that pool in. Now you have that flexibility, which
Absolutely.
is an awesome thing.
It's just leveraging your money.
Yep, absolutely. Well, I know we're starting to run out of time, so thank you so much, Eva.
We do have one more question.
Oh, do we?
Yeah,
bring it on.
Came in. Is there a negative for the seller if they're looking to buy another home? So I can speak from the lending side, and Eva, you know, this is probably where you would go into some of it. From a lending side is, if you are trying to buy another house, once that assumable is over, I don't have to count that payment against you anymore. So we still have to wait kind of for that closing to happen for us to not have to count that in your debt to income ratio. We can't close early. So from a negative standpoint for the seller, you have to wait for that assumable process. But if you're having to sell your house to buy the next one anyways, it works the same way. It's just a little bit longer of a process because we are waiting for that assumption to take place. But Eva, on your side, what do you, from a seller's perspective, what negatives do you see from that?
I don't know that I have that perspective, because my seller it wasn't a contingent. He was out of the state already. He was just, you know, needing to get it sold. My buyer in that case, he was selling, but it wasn't contingent. So we just started that process. But, you know, get with your realtor, because really one of the things we do, we problem solve. Every situation is different. We all know a good lender, like the Joes, and we talk to them. Hey, this is what I have. How do I get this to work? Because we don't have all of the answers, right? But we know the people who will help us get there. And so that's why it's important to hire a realtor. It's not because we have all the answers, because we know the people and we know how the process works. And if I don't have the answer, I'm going to figure it out so that you can make the best decision for you. That's our sole goal. Best decision for whomever.
Agreed, 100%. Well, again, Eva, thank you so much for coming on the show. We really appreciate all the insights you've been able to give to our listeners out there. And if any of you have any additional questions for Eva, want to reach out to her, get in touch with her and strategize with her on things, the best way for people to get a hold of Eva, you can see at the bottom there, her email address, eva.ray@compass.com. So next week, folks, tune in next week as we have a special returning guest to the show, Emily Bro from Homestretch, as we go through preparing your home to sell, especially for the upcoming spring market. So tune in next week at our usual time, Wednesday, 9 a.m. Central. Even better yet, still, be sure to subscribe. Go to our YouTube channel, subscribe there so you don't miss any show. And this way as well, you can go back and listen to perhaps parts of this show that you missed. But be sure and hit the subscribe button because we are on a mission to get to 1,000 subscribers. And of course, every like, share, and comment helps us reach more homeowners like yourselves. So before we close things out, any last words or nuggets of advice for our listeners, Joe?
Just thank you, Eva, for coming on and sharing your experience and expertise of assumptions. And guys, work with a great partner like Eva. If you are trying to sell your homes, reach out to her, especially in the Houston area.
Thank you, gentlemen.
Well, I'm not Cup of Joe. He is. I can't even get our names right. I'm Joe Mortgage. And that handsome guy with the beard is Cup of Joe Mortgage, and we'll see you next week.